All right, welcome back for another edition of our Mitten Mortgage Lending Podcast, last one of 2024 with myself and owner Chris Sabonik. We're going to jump right into it and talk about refinance opportunities now. It's the holidays. Sometimes we kind of overspend. We spoil those kids a little bit too much. Maybe if you're a new dad, you spoil your kid a little bit too much, like Chris is here today. But yeah, so it's a refinancing opportunity to save some costs, get a quick fix, kind of recalibrate your finances, and some other cool programs that are out there right now.
Yeah, no, I mean, Mac's spot on. Holidays are here. Spending is...
This is the time when you spend the most.
It's all over the place, whether you want to or not. You're spending money right now.
Mm-hmm.
And yeah, what Max said, refi, I mean, whether you're taking cash out, rate and term, anything, we can look at having you skip a couple payments anytime you refi, which that alone is usually sometimes enough benefit. I mean, we're not going to refi you just to skip 2 payments, but that alone for some people is like the game changer.
Yeah, if you're skipping 2 months and your payment's $2,000, I mean, who doesn't want to keep $4,000 in their
There's
pocket?
$4,000 that stays in your account. So skipping payments, Mac was talking about some special programs for anybody doing a rate and term right now. So for anybody with higher interest rates, or maybe they were in a longer term, they were in a 30 and they want to drop to a 15 or something like that. So for people who aren't taking cash out, there's a special buy down program right now. I know we've talked a lot about buy downs on purchases, where you can use the seller's money or the seller's concessions to get a lower rate for the first year. You can do that on a refi now. And when you do it on a refi, there's no seller, there's no one involved, so it's using your own money, but it's kind of cool because you can use the equity in your home, assuming you have equity in your home, which we're going to need some to refi.
Yeah.
You can use your equity to get this buy down.
Yep, and it's going to be a 1-0 buy down. So 1-0 meaning, if we lock you in, let's say on this refinance at a 6.5 for year one, it's going to go down 1%. So you're going to be using the 5.5 interest rate for that first year. So we kind of were discussing a little bit off camera before we started here. If you're somebody and you're sitting there at a 6.8, 6.9, does it make sense to refi to a 6.5? Maybe not. But if for the first year we can go to 6.5, but it's actually going to be a 5.5 because of this buy down, then you bought yourself into a 5.5 for a year, and then after that expires, those first 12 payments, if we're not able to refi you, if rates don't come down in 2025, which everyone says they should, and we're all expecting to, at least at some point, then we're taking advantage of that. Worst case is, after 12 months, you're in a 6.5 when you were in a 6.8 or a 6.9 or something like that. So you are in a little bit better spot, but you definitely got in a better spot for the next 12 months by, lowering that payment by a full percent, but also, like we said, skipping 2 payments. Escrow refund check, there's a lot of benefits.
Yeah, there's a lot of benefits. And lining up with, literally everything else that we say and everything else we talk about, this isn't for everyone. It's not going to work right for everyone. But for a lot of people, if you have some extra equity and you want to get a little bit lower payment, and depending on what your situation is, it might make perfect sense. The example that Matt gave is a phenomenal example. A lot of people are hanging out at 7%, maybe higher. Mm-hmm. Like Matt said, maybe we can get them to a 6.5. Under most conditions, I probably wouldn't encourage a lot of people to refi from a 7 to a 6.5. I may not. Very independent on their own situation. But if we can go from 7 to 6.5 permanent, 5.5 for the next year. Well, hey, let's pay 5.5 for the next year. We know we're going to come back to 6.5. If we can get better than 6.5 a year from now, let's do it again. Yeah. If we can't get better than 6.5, then we'll figure it out. But either way, they'll permanently be at 6.5 instead of 7. So we're going to see. We're going to do the math, but it's a
and like you said, there's it's not for everyone. And there's basically 2 types of people out there. There's people that look at that loan balance and they don't want that to go up. They probably won't like this.
They're probably not.
But there's other people that just say, just give me the lowest payment you can give.
Yeah.
This is for you.
This is for you.
If you're one of those where you just want the lowest payment ever, maybe you are in your forever home, and again, you're just focusing more so on payment where you're at financially right now, this probably is for you. Again, if you're somebody where you don't want things to go up, you don't want that loan balance to get higher, or you don't want to mess with the years, probably not for you. But if you're somebody where you just want that payment to be lower, or right now you're strapped and maybe things have gotten tighter than you thought, maybe taxes went up on you.
You bought a house and your taxes skyrocketed.
Yeah, so
we see a lot of that.
You could be looking for a little bit of relief. This is a way to get some of that relief.
Yeah, and what's cool about this is, we talk about using your equity. We've talked a lot before about people taking cash out and using their equity for smart things instead of paying, high interest debt, things like that. Well, your equity in your home is you really don't get to use it very often. You
It's essentially like a safety net.
It's kind of like a savings account that you can never go touch. You can't go to the bank unless you get a line of credit or something. But we're not going to go down that road. You really can't go to the bank and say, "Hey, give me some money out of my equity. I'm gonna use my equity." You really almost never have access to your equity. You kind of only get your equity when you go to sell your house. It's really the only time most people ever see home equity is when they sell that house.
That or you're taking out a large chunk. You're doing a HELOC. You're doing something much more. You can't go to and be like, hey, I need $1,000.
Yeah, let me get $1,000 out of my home equity to use for the next year. Well, that's exactly what this is.
Yeah.
Hey, you want to front yourself some money for those payments. You want to use a little bit of your home equity. Use it right now. It's a really good opportunity to use your home equity because, like we said, tapping into home equity it's not like that hard necessarily, but there's not a lot of opportunities and ways to use your home equity. Mm-hmm. This is an awesome way to get to use your home equity, which a lot of people really never, ever, ever get to use.
Yeah, and just to give you an idea on what these numbers kind of look like. So, like, we ran the numbers, a little test dummy here for this little test project. If you had when we refinanced you, if your loan amount was $250,000 and we got you into a 6.5, that means for the first year it was going to be a 5.5. That lowers your payment by $160 a month. So again, if $160 a month sounds good enough to you to say for the next year, and
just shy of $2,000.
Yeah, it's going to cost you $1,928. So yeah, it's not even going to cost you $2,000. That gets rolled into what you owe, your principal balance. It's not getting it's something you're paying out of pocket, and that's kind of what we're leading to next. Is I get asked about all the time, and some people market this, which I just find weird. But our refinance is free? So I'll let Chris take that.
Is anything free? So here's the joke with that. You'll hear it a lot, and we call it a joke because you'll see all the lenders free refi when the time when you buy with us, you get a free refi.
To me, what they're saying is no money out of pocket, which is yes.
I think that's what they're saying.
I think so too.
It's very unclear.
That's almost all rate and term refinances is no money out of pocket unless you choose to put money down for some reason.
Yeah,
but some people do that, but almost all refinances we do, clients don't bring a dime.
There are very little refis in which people bring cash to closing, and if they do, it's usually because they want to.
Yeah, there's more closings that we have for refinance where people get money as opposed to pay money.
Oh yeah, heavily
favored.
So when people say is it free, look, I don't know what that means. I don't know what a lot of these people are advertising when it's free. I can guarantee you most of these mortgage companies aren't doing your loan for free when the time comes. So
most are charging fees.
Most are charging exorbitant fees. So that's what I always say. Like there are no junk fees. There's no junk fees with Mitten mortgage lending. There haven't been any junk
fees. Purchase, refi, VA. It don't matter.
Purchase, refi, FHA, VA. I don't name your loan type that we do. There's no junk fees. Yeah. So I mean, I got our refis are junk fee free. Any of our refis, our purchases. Any of our loans are
junk free.
Junk fee free.
Yeah.
So yeah. But yeah, questions, guys. Just pay attention. If you are working on a loan on a refi, pay attention to what you're being charged for it. That's really the biggest thing.
Yeah, normally box A, right at the top, second page of your loan estimate, top left corner.
Box A.
It's going to say something. Just add up the total of that box. Cause
it'll tell you everything you need to know.
Yeah.
So use your equity, use it wisely. Refis, 1.0 buy down. If it sounds interesting, if it even sounds like remotely interested to you, give us a call.
Yeah. And the 1.0 buy down, it's here now. I don't think it's one of those things that's going to be around for forever.
Yeah.
So I would look to take advantage of this.
It's here till it's not.
Yeah. I'd take advantage of this soon if it's something, or at least give us a call, talk about it, discuss. So next thing, again, it's coming down to the end of the year here. 2025 is about to pick up. So I know around here in our office, we're talking a lot about 2025 goals, things we want to be doing in 2025, how to enhance our business, grow our brand, things like that. And so we want to spend a little time talking about partnerships. And this goes to the partnerships we already have out there with, real estate agents, with financial advisors, insurance people out there. So talking to those partnerships and, our appreciation for those. And again, reach out to us. Let's talk about those goals. If we already work with you right now, what are your goals for 2025? How can we help with that, getting to that point?
Yeah, no, I mean, Mac hit the nail on the head there. It's that time of the year, right? It's the end of the year. It's evaluation time. It's time to look back and see what we did. Did you have a good year? Did you have a bad year? What'd you miss? What didn't you do? What could you have done different? It's just evaluation time for the year for most people I know. Current partners, people that we work with, what can we do or what did we do that helped you, right? Just let us know, communicate with us. if you're looking back and you're kind of setting up your 2025 goals and 2024 didn't go the way that you wanted it to, we do this too internally, but I would challenge you to look at your partnerships and look at what you're doing. Is your full circle, is everything you're doing helping what your goal is? If your goal is to make more referrals, are you working with LOs who are referral oriented? Are you working with title companies who are referral oriented? Right? It's not just an LO thing. There's a whole ecosystem here. Insurance agents, right? Are you working with an insurance agent who's taking care of your referrals? So evaluate that. Think about who you're working with, and think about if there's anything you missed out on because of any particular partner or anything. I know we've had people who called us that lost deals because they took too long or probate happened, or I don't know. You name it, right? So evaluate and see what we can help with. I know, there's I think a lot of benefits that come to working with Mitten Mortgage Lending, especially for your referral for those that work on referrals, because that we're focused on the same thing.
And one of the things, I know that we preach all the time, we do post it a lot out there when it comes to our closings and things like that. And I know that agents that work with us, whether it's just a few times or, for the first time, normally speed is one of the things I hear that is most impressive about us, is the speed that we do have. And speed is important. Like, I don't care what any loan officer says. If they tell you speed is important, they're completely lying. Speed is important to get deals done. And I just had one client had a home in redemption, needed to be done by a certain point. I think we got it done well before that redemption period. I know that agent reached out and said he was impressed with how quickly it got done. Didn't think it was going to be possible, and we knocked it out of the park with that. Again, we've had ones. Probate wasn't an issue at all. If you have deadlines to meet, we've had plenty of them where it's like, hey, can you guys get this? We have to get this done in 15 days. We have to we need to be closed, and we got to order it. And all these had appraisals. All of them did.
Yeah.
So those things didn't slow us down. You get lucky, you get a good appraisal, no issues, things like that. Those can slow it down.
Business still happens.
There's things that still happen. But from what we control in these four walls in this office here, those things got done smoothly.
Yeah, well, I had one. It's the end of the year here, obviously. I had one. It was flipping. It was a seller, LLC flipping for tax purposes. The seller really wants it sold this year. Mm-hmm. We had the conversation about trying to get it done this year. I put it in a week ago, and this morning I got a call with CTC. So they're closing this year.
Yeah, we're talking about the speed with all this over the past couple weeks that we've had in here, and all of mine have thanked me for being in their house before the holidays, which is super cool.
Which is awesome.
As far as a loan officer, makes you feel really good for doing that good job to getting them in there before the holidays. That's a big deal for people right now. It's
cool. It's fun right now. Yeah. It's super. It's always rewarding, but it's even cooler when people are like, oh my gosh, we're gonna get in there and everyone's gonna come to our house for Christmas.
Yeah, exactly. Yes. Cool. I get to show my house off the holidays.
Yeah.
Sweet. So, again, going full circle here to the partnerships, whether we work with you currently or whether we haven't worked with you at all before, would love to sit down and discuss your 2025 goals, how we can help, how we can be a part of it, and how we can help you grow as an agent or any of those referral partners like we talked about.
Definitely.
So, moving on here to something we're seeing a lot right now, just because of the winter months
of the year.
In Michigan, in the winter months here, and that is the escrow holdbacks. That we've had to use them on a couple of deals here, especially for winter. So we normally see these, with FHA, that's where it's more prevalent, definitely. Whether you got a paint issue with a garage outside or concrete issue that can't be done here in Michigan.
I say we're not seeing these in our Florida and our Texas and our Mississippi partners. They're not. This isn't maybe so much for them, but here in Michigan, beautiful weather here. FHA, concrete issue. You name what FHA issues may pop up.
So if you're a seller or something, just what is an FHA holdback? What is that?
So the way it works, FHA, especially in particular, can get a little bit more specific about the house, right? So concrete, chipped peeling paint, just little things that the FHA says, hey, these things need to be done before we will finance, before we will fund on the home. Well, the way that a holdback works is here in the winter in Michigan, sometimes you can't paint based on the temperature or the weather or the snow. If it's a concrete issue and your driveway's all messed up, they're not going to bust up your concrete and come pour new concrete in the middle of January while it's 10 degrees out and it's snowing. So the FHA wants these things done in order to lend. But what we can do for an escrow holdback with FHA is we can have the money to fix those items set aside and just sitting in an account, basically in an escrow account, so that as soon as the weather is okay, those items get taken care of. And the FHA, by having the money in that escrow account, they'll let you fund on your loan and close on your loan without having to wait. For example, you have an FHA client who's buying a house, and the driveway, a slab on the driveway needs to be repoured. Well, they're gonna mark it and say it needs to be done, and the concrete guy's probably gonna come out and say, hey, cool, we'll be back in April. Well, you don't have to wait till April to close on your home. You can close now. We can get the money in that escrow account, and the FHA knows that it's going to be taken care of with the money in that escrow account, so you don't have to wait.
Yeah, and it's normally not that big of a hassle. Was it 2 or 3 quotes you need to get normally for something like this
Yep.
to get the job done? And they normally use the highest, average. What is it?
Yep. They'll set up the quotes. You'll get the quotes all set up. They'll take an amount based on the quotes that you have. It's super rare for the quotes to not basically all line up with each other, right? If one's way off, then you're probably looking at that more. But they make an average. They take a number off of those quotes. They'll usually retain a little bit more. They'll kind of do a formula and just make sure there's a little bit extra in there, just in case. Maybe it's 6 months later and cost of concrete goes up, right? So and I'm using concrete as the example. It could be paint, you name it, right? Whatever they cite, but they'll take a little bit more just to make sure that for example, I know during COVID, building prices, certain prices of things just jumped up overnight. So they'll take a little bit of extra. They make sure they have a buffer, and then the best part is when it's all said and done, if they over collect, the rest of that escrow money just gets returned. It's not like it's not like the company gets overpaid to finish doing their job or whatever, because that money goes back to whoever was holding the escrow, whoever submitted the escrow. So.
Yeah, so that's something again you'd be seeing right now during winter. So again, if you're an agent dealing with this, maybe with one of your listings, if you're somebody that's looking to sell and maybe you're not going to sell because you want to get the most buyers out there for your property, and you know that your driveway's got some messed up cracks and big dips in it and things like that, and you want to get that repaired, and you think, man, I have to wait now to April, May, June to put my home on the market. There's ways around that. So again, talk to a local agent in your area. And again, if you're an agent dealing with this is something we deal with all the time.
Definitely don't not close on an FHA loan. Or we're using FHA because they're the ones who are most likely to have some sort of an issue. But don't, through the winter here, especially to Michigan agents, don't let any type of escrow thing be a reason that you don't close on a home or you wait for months. It's almost always something that can get worked out.
Right. And this, again, last thing we want to talk about, and this is a topic that we've repeated, but we repeat it because we can't stress it enough, and that is getting pre-approved now. If you are looking to buy, obviously if you're looking to buy in the near future, you want to get pre-approved now. But if you're looking to purchase in March, April, May, that when the weather gets warm, you're going to be on the move. If you know that, get pre-approved now. There are so many times where we have clients get pre-approved at the last second, the 11th hour, and there's something that we need to fix. If you get pre-approved now, you have more than enough time for us to basically handle any issue we might have with your pre-approval, whether it's improving your credit score, whether maybe you think you have enough money saved, but after speaking with us, you don't. Maybe you need to save an extra $4,000. Okay, now a lot of people that I've talked to that have run in that, sweet, now I know what I'm going to do with my tax return. I know that I'm going to have to hang on to that money.
Yep.
So
it's the time of the year for that. So.
Yeah.
Yep.
So maybe you may have questions about your income. You may think that, I can use my child support income, but you might not be able to. Okay, we can dive into that stuff now. And a good question that people always ask. Our guy Leo asked it before we got started. When does that pre-approval expire? So pre-approvals here last for 90 days. But to get that, if we issue it, let's say January 1st, January, February, March rolls around, it's April 1st. Now do you not have a pre-approval? Now do you have to apply again? No, you don't have to do that. It's really a simple phone call with us. It takes like 2-3 minutes. Do you have the same job? Do we have the same amount of money saved? We may have to re-pull credit. Normally we like to wait till they're going to put in an offer or something like that.
Yeah.
But as long as there's no new major purchases, we can really reissue that pre-approval to you, again, literally a couple of minutes.
It expires, but that expiration doesn't mean you go fill out the app all over again. And now, if it's been a year or 2 years or 3 years, then yes, sure. The apps have changed, things have changed, you may re-update. But exactly what Max said, if you got pre-approved with us 90 days ago, your pre-approval letter expired, you need a new one. It might be a 2-minute phone call. It might be 5 texts back and forth between us. And then it might be 2 texts back and forth between us. But it's so easy to update. And like Max said, just do it now.
Yeah,
Like,
yeah.
Just get approved now. I can't tell you how many people. Max said something earlier, and it made me think of this. If you want to buy in March or April, May, June, I don't care, whatever. Going out further, just let's get into March for right now because that's 3 months away, right? If you wanted to buy in March, there are very few people, I would say, who if they called us right now and they didn't qualify right now, I'd like to think there are very few people if we talk to them now who we couldn't have ready to go by March.
Yeah.
So if you might know that you don't qualify right now. You might know that you don't. You might say, "Hey, I've got a great job. My credit's in pretty good shape. I have no money saved. I don't qualify. I'm not going to call Mac right now." I would prefer you did call Mac right now, honestly. Talk to Mac about how much money you need. Call us and talk to us about what your plan is, what you want to buy, because just get ahead of it, right? Just know what's going on.
And a big reason why is there may be programs out there that we know about that you don't, where that might work for us, or it could not. We might find there might be a program you qualify. Like I know I have clients pre-approved right now for the Home Ready First Time program, where I know they're going to get $5,000 guaranteed. So they only need to have 4 or 5 grand.
Yeah, they only need a couple grand.
That works for them.
Yeah.
There are other people where if you said, "Hey, I have 7 grand saved," I'm going to tell you that's not enough because it might not be that program, or what you're shopping for is higher than that is. But there's also where it's a credit issue. Okay, well, I'm not going to apply right now because I know that my credit's only 650 and I can't get a conventional loan with that. We can get you into that. There are programs to help you out right now. Or pricing's really bad, which right now we have no LLPAs, loan level pricing adjustments on FHAs and VAs. So if your credit's really bad for VA, doesn't matter. As long as it's over a certain point.
Yeah, we might have a special, and it doesn't. You might get the same price right now. When Max said the LLPAs, loan level pricing adjustments, that's the adjustments that they make to the loans based on credit score, down payment, all those things.
Low level VAs and FHAs right now, they're zero.
Yeah,
so they took them away.
So somebody again,
right now,
we've got to get you qualified. Still, everything's got to line up. But somebody who's got a 620 credit right now with the special that Max talking about. Let's use a VA loan for example. Somebody who's got a 620 credit with VA. And you could take all of the application could be the exact same, and this person has a 720 credit. They're going to get the same pricing because of the removal of those LLPAs right now. So don't make assumptions, I guess, is really what I'm going to say. Just call us, and we're always just going to be honest with you. Like if it's not that, don't be afraid to call us. Say I don't want them to call me and push me into a refi. Like read our Google reviews, read about us, check us out. That's not what we're about. Like, if you call us and it doesn't, let me put it this way. If you call us and I wouldn't do the loan myself, I'm probably going to tell you I wouldn't do the loan myself. If you decide to do it, that's fine. But, we're not, don't be afraid to call it because you don't want to get sold or pushed into something. Call and ask questions. I would say for 99% of the world, their home is their largest asset. So, don't just wonder if you have.
Let's be over prepared for it.
Let's just talk about it.
Yeah, let's be over prepared for it. So we were discussing, if someone were to call right now and get pre-approved, which a lot of clients are calling right now to get pre-approved, that say that, hey, I'm not going to buy it till March, April, totally normal at this time of the year. But if they're the home they want to look at or the home they want to buy, or let's say it is their dream home, whatever, pops on the market on March 20th, they're going to be ready to go if they fill out an application, this week, last week, and they're already prepared. As opposed to the person that's going to say, okay, this home's becoming available March 20th. I love it. The pictures look great. It's the neighborhood I want to be in. Well, it's March 19th. Well, now I got to go get pre-approved. Person A is in a much better spot than person B.
Way better.
Yeah, because there's not, hopefully, unless they're...
Person B might miss out on that house.
Exactly, because they just weren't prepared and didn't take the steps now to get pre-approved. So they've taken that step now to get pre-approved. It's really simple. It's free. It takes about a 10-minute phone call with us, 10 minutes filling out the application. I mean, literally, you can get it done in a half hour.
Yeah, it's super. There's no reason not to be ready. There's no reason not to be ready. And back to the last part, we've talked about this too. Now is a hell of a time. If you've been trying and you've been stuck or you haven't been able to get something, I've had a lot of clients in the last couple of weeks that have been shopping for a very long time finally get things clicking because I don't want to say it's settled down. It's not slow out there, but it's holiday time. Some people are chilling right now.
Less competition.
There's less competition.
Less competition right now. Less competition means not only less people to compete against, but also buyers have a little bit of power now. I'm seeing a lot of deals where the purchase price is less than the listing.
It's
which come July, you're not seeing
that's over. But it's the old supply demand. Like the demand is I don't think it's permanently down, but temporarily, holiday time, this happens. Demand dwindles a little bit. People kind of plug it away, or some people that have been working at it for the whole year say, forget this, we'll come back in March, we'll pick this back up in the spring, we'll start shopping again. So it's a good time if you've been, if you've had trouble in the last couple of years or even the last couple of months, it's a good time. Don't get discouraged.
Yep, so quick rundown again, we talked about refinances, 1.0 buy down program. We think could really benefit a lot of people out there, move you temporarily down 1 percentage point on your interest rate for the next 12 months. Partnerships, real estate agents, title companies, whoever it might be, evaluate those. Again, if we worked with you in the past, or if you currently work with us right now a lot, let's sit down, call us, let's set up a time. We want to discuss 2025 goals, what we can do to better, what we can do to be better, what we can do to make you better. Escrow holdbacks, don't let that hold you back from selling your home right now or closing out a deal and getting pre-approved right now. That's all I got for 2024. Anything else? Send it out with the bank for the new year.
Yeah, good year, great year, everyone. Looking forward to 2025. It's going to be fun. Hopefully the rates will creep back down for everyone a little bit. And I don't know. I'm excited about 2025. I think there's going to be a lot more refis, and I think it's going to be a good year.
Yeah, hopefully those rates come down. Get more people out there, more first-time home buyers, more good stories, more good feelings coming from the office here. So that's it for us. Everyone have a happy holiday season. Merry Christmas. Happy New Year.
Yep.
See you guys in 2025.